Rowe Price. Is it really a great stock? Let's find out. Welcome to Global Value, and in this video, we're going to dive deep into a fundamental analysis of TROW stock, ticker symbol TROW. We'll use methods from none other than Warren Buffett, one of the greatest investors of all time. We will study the key numbers that Buffett values most, and then we'll figure out 3 different prices for Rowe Price to really understand what it's worth in today's market. Stay with me till the end because our final fair value and rating might just surprise you. And there's more. I'll also share a special bonus that could be the deciding factor when adding Rowe Price stock to your portfolio. So is TROW a great chance to make money? Let's find out together. Right now, Rowe Price trades for $106.17 per share. The last year has been rough on the business. Their stock price is down around 10%. This way underperforms the market, with the S&P 500 up more than 20% in the same time. But there's more for shareholders. Right now, Rowe Price pays a huge market-beating 4.6% dividend yield, plus they've grown their dividends in each of the last 35 years. This is an insane track record that makes them a dividend aristocrat. Over their history, their average dividend yield is added to any gains in their stock. In the last handful of years, while they beat the market for much of this time, Rowe Price has only compounded at 2% annually. They really started dropping at the end of 2021. In the last decade, Rowe Price has compounded at 3% annually. And when we go back before the global financial crisis, in the last 18 and a half years, Rowe Price has compounded at 7% annually. They crushed the market for much of this time, only falling behind it within the last couple of years. Plus, their dividends are added to this. Now, the burning question is, why should we be paying close attention to Rowe Price? Right now, Rowe Price trades $20 above its 52-week low. This comes at the same time that they trade $26 below their 52-week high. Plus, there's plenty of short interest with 7% of their shares sold short. And how big is Rowe Price? They're pretty decently sized. They have a $24 billion market cap. With their steady history, what does the company actually do? Rowe Price provides asset management services for individual and institutional investors. It offers a broad range of no-load U.S. and international stock, hybrid, bond, and money market funds. At the end of October 2023, the firm had $1.3 trillion in managed assets, composed of 51% equity, 33% balanced, 13% fixed income and money market, and 3% alternative offerings. Approximately 2/3 of the company's managed assets are held in retirement-based accounts, which provides Rowe Price with a somewhat stickier client base than most of its peers. The firm also manages private accounts, provides retirement planning advice, and offers discount brokerage and trust services. The company is primarily a US-based asset manager, deriving just 9% of its assets under management from overseas. Now, with that understanding, let's dive deep into the numbers that Warren Buffett cares about. This step-by-step checklist-style approach reverse engineers how Warren Buffett would look at a company's numbers. It gives you one of the best shots of finding undervalued, high-quality stocks that can beat the market and make you a lot of money in the process. Getting started with metric number 1, we want their average return on capital in the last 5 years to be above 14%. Return on capital helps us figure out how much a company earns based on all the money invested into it. An average business earns around 7% returns on capital, so when we look for double this, we can build in margin of safety based on the quality of the company. Over the long run, in the course of decades, a stock is likely to return around its return on capital numbers. So it's pretty important that Rowe Price has earned very high returns on capital in each of the last 5 years, but it is worth noting that these have come down somewhat, especially in the last year. Rowe Price earned 34% returns on capital in 2018. These declined to 24.5% in 2022, yet when they're averaged out, Rowe Price earns 30.3% returns on capital in a given year in the last 5 years. That's 4 times better than a normal business, and it's still a huge check on metric number 1, but pay attention that their returns have declined. Next, in metric number 2, we want to see growth in their sales, earnings, and free cash flows. It's harder to make mistakes investing into high-quality growing companies. In their numbers, we see Rowe Price really had a boom year in 2021. This corresponds with a big uptick in the American stock market generally. Since then, their trend is more or less back to normal, but it is down year over year from 2022 into their numbers in their last 12 months. Their total sales have grown by 18%, but both their earnings and their free cash flows are down compared to where they were at in 2018. In their last 12 months, their earnings are down 12%, and their free cash flows are down 34%. That's something to keep an eye on, as they're both lower than any of these other years over this time, even though they're not shown on the chart. It's an X on metric number 2. In our third metric, we want earnings per share growth. This looks at Rowe Price from the view of an individual shareholder. It helps us figure out if they're creating value, if their per share numbers can grow, and they earn high returns. That was the case for much of this time. Rowe Price was growing from 2018 until 2021. Since then, however, their earnings per share are down. Rowe Price earned $6.70 in 2022 for each share that they had outstanding. This increased to an EPS of $7.01 in their last 12 months, yet it's still down from where they were at in 2018. That's from their 12% decline in earnings. This is slightly offset as Rowe Price has bought back 9% of their shares in the last 5 years. For a company like this, it could be a good sign for long-term shareholders, but keep in mind Rowe Price was trading for some pretty lofty valuations, so that might not have created value. Either way, we see that their earnings per share are down. It's an X on metric number 3. Metric number 4 is similar, but even more important. We want their free cash flows per share to be growing. Free cash flow is the lifeblood of any business. It's ultimately how most stocks are valued. We'll use 3 different methods based on their free cash flows to figure out what Rowe Price is worth later in the video, so watch to the end when we put those together. Rowe Price saw a boom in their free cash flows in both 2021 and 2022. However, in their last 12 months, for much of 2023, their free cash flows per share are down. They've brought in just $4.26 per share. That's lower than where they've been at in any of these years over this time. It means it's an X on metric number 4, as these have declined. So far through 4 metrics, we have only 1 check and 3 X's. Can Rowe Price turn it around in the back half of our analysis? We'll find out, but first, why don't we cover our bonus? Right now, Rowe Price pays a huge market-beating 4.6% dividend yield, plus they've grown their dividend payouts in each of the last 35 years. That's a great track record, rivaled only by a special group of companies. In our bonus, we want to figure out if Rowe Price can keep this growth going. Do they support their dividends using their cash flows? That answer up until 2023 has been yes, but something changed in their business. Rowe Price has aggressively increased their dividends over this time. Meanwhile, their free cash flows did grow, but not at the same rate. The company was pretty bullish on their regular dividend growth, plus they gave out $3 per share as special dividends in 2021. That may have been a good capital allocation decision, as their stock price was very high and they had these extra free cash flows. But today they pay out more dividends per share than they bring in free cash flows in their last 12 months. Things have to change for the business, and they need to earn more free cash flow to support this dividend into the future. Their dividends aren't fully supported today. It's an X on our bonus. Now, what about the company's debt? Great companies can grow and earn high returns without using a lot of debt. In fact, in recessions, it's businesses with too much debt that can have the biggest losses and even go broke. You don't want to invest into bankrupt companies. Metric number 5, we want their net debt to be below their free cash flows in their last 5 years. Now, this looks pretty good for Rowe Price. They have negative net debt, meaning they have cash left over after paying their debts in all 5 of these years. Today, that's at $2.1 billion in leftover cash. Plus, Rowe Price, even though their free cash flows are down in their last 12 months, has produced positive free cash flows in each of the last 5 years. From 2018 until 2022, these grew by about $700 million. When we add them up, this comes to just shy of $10 billion over this time at $9.8 billion. Not only do they have this long-standing cash cushion, they also bring in a ton of cash each year. It's exactly what we want to see. This is a solid check on metric number 5. Now, what is Rowe Price possibly worth? Metric number 6, the big metric of them all, we want their average 5-year free cash flow yield to be above 5%. This estimates what the stock would be worth when an average of its free cash flows over the last 5 years is divided by its enterprise value. Simply put, it looks at Rowe Price more like it's a private business against the long-term average of the stock market. Right now, Rowe Price has a $22 billion enterprise value after adding their market cap and their net debt together. In an average year over this time, they bring in $1.96 billion of free cash flow. When we divide that by their enterprise value, it gives us an 8.8% average free cash flow yield. That's above our risk premium. Keep in mind though that today they brought in $955 million of free cash flow in their last 12 months. When that's divided by their enterprise value, this only gives a 4.3% current free cash flow yield, slightly below what we wanted. Still, free cash flows can be lumpy year to year. That's why we take an average here. Rowe Price is above that 5% benchmark, meaning this is a check on metric number 6. Don't just run out and go buy the business, use common sense. Everything we've covered so far is important, but there's still something missing. This takes us to our second estimate, where we use a DCF valuation to figure out what Rowe Price may be worth. Let's take an average of their last 3 years of free cash flow and use historical assumptions to project these into the future. Then let's add in their tangible book value to estimate their net worth. If we assume their average free cash flows grow at 7.5% annually in each of the next 10 years, then in the following decade, we'll assume that these grow at 4% annually. If we want a market-beating 15% rate of return, which is what Warren Buffett looks for, Rowe Price's fair value is around $105 based on today's valuation multiples according to this DCF. Keep some key points in mind. Even though Rowe Price has been extremely predictable, right now they trade at 22.5 times EV to free cash flow. In the past decade, they've traded for a median of 18 times this metric. Their price to owner earnings look like they may be more undervalued. This trades at 10.5 times, where their median in the last decade is 14 times. Yet their PE ratio is smack dab in the middle. They trade at 15 times price to earnings, where historically they've traded for around 16 times, pretty close to the market average. Our third estimate uses the Guru Focus value for TROW. Right now this comes in at $120 per share with a modestly undervalued rating. When we check out their valuation chart, Rowe Price looks somewhat split on many of these numbers. Using different versions of valuing the business, they look attractive on a handful of these numbers, but not some of the more stable ones like a Peter Lynch value. We've covered most of the company's numbers Warren Buffett cares about, but it's the qualities of a business that are even more important to him. Let's learn what these are for Rowe Price before we put these together with our estimates to give them a fair value and rating at the end of the video. Let's start with a long thesis first. With $1.3 trillion in assets under management at the end of October 2023, Rowe Price is one of the larger US-based asset managers. Retirement accounts and variable annuity investment portfolios, which are stickier than retail assets, account for 2/3 of assets under management. Number 2, Rowe Price has the capacity to grow its international fund offerings, such that the company's organic assets under management growth could be bolstered in the near term should performance recover. Number 3, at the end of September 2023, 63% and 90% of Rowe Price's multi-asset funds were beating their passive peer bases on a 3- and 5-year basis respectively. So the company's offerings have performed well recently. But it's not all positives for the business. Let's check out some negatives as well as we look at a short thesis. Number 1, the company's equity performance has been weak, with just 36% and 53% of funds beating their passive peers on a 3- and 5-year basis, as of the end of September 2023. Number 2, fixed income performance has stumbled as well, with 53% and 57% of bond funds beating their passive peers on 3- and 5-year bases as well. Number 3, with a substantial portion of Rowe Price's assets generating fees based on daily AUM levels rather than monthly or quarterly averages, sales will be more heavily affected during periods of extreme market volatility. The company also saw their most outflows in a single year ever in 2023. Right now, these 5 super investors own Rowe Price. The biggest positions are by Hillman Value Fund and Torrey Funds. Thomas Gaynor, CEO of Markel, also has a very small position. This far in our fundamental analysis of Rowe Price, stock ticker TROW, we learned they go 3 for 6 on the Select 6 analysis. They earn high returns on capital and may look attractive based on their free cash flows today, plus they don't use a lot of debt. But even though the company's sales are up in recent years, their profitability is down. That could hit the company standing with investors hard as they no longer have the cash to fully cover their dividend. Look for a likely slowdown in their dividend growth, or if they can't get their free cash flows back up, maybe even a dividend cut on the horizon. This analysis is not financial advice. It's not a buy or sell recommendation of any security. Use common sense and do what's right for you. As we combine the company's estimates and their qualities together, we get a fair value for Rowe Price of $121 per share. That's $15 above today's market price. Fair values will range on either side of this number. It's $27 above the street target price. Rowe Price looks to be modestly undervalued. If you enjoyed today's Rowe stock analysis, like it, share your thoughts in the comments, subscribe to the channel for more, and watch this next video. You may enjoy it too.